Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics, coming to you with some updated thoughts. First set of updated thoughts in the new year. Hope everybody had a great holiday. Hope the new year is off to a good start for everyone. I took last week off, much refreshed, much needed week off. Spent a lot of good time with my family, predominantly. Hard to get together with a lot of friends still, considering the current environment, but a lot of good family time. A lot of time to decompress, a lot of time to get things done. Actually stepped away, proud of myself. I stepped away from the market for the most part, so that was good. But spent the better part of yesterday getting caught up. Obviously, this morning, Monday morning, we're back in the swing of things. So just wanted to kind of hit some updated thoughts. All right, first and foremost, I'm not a believer in the change in the calendar means you change anything in your investment philosophy, your investment profile, your investment strategy. Price is what dictates your strategy. Price is what dictates whether or not you should make a change, right? So just because we flip the calendar doesn't mean the trend all of a sudden restarts from zero and we have to figure out what's what and who's where. All right, the trend in the equity market since the March lows remains to the upside. The S&P 500 closed the year at an all-time high. By definition, an uptrend. Within our work here at Chaikin Analytics, thought it was interesting to see over the weekend that Qs flip back to a bullish ETF rating. We've been talking for the past few months about having a broader view, where the first half of last year could largely be described as, or at least coming out of COVID, largely be described as own growth, nothing but growth, you'll get paid. That started to change halfway through the year, and having a more balanced, a broader view on equities made a ton of sense. I think a lot of the rotation that you saw in the last quarter of 2020 was not a rotation from growth to value, as everybody kind of called it. It was a rotation from mega caps to everything else. Take a look at IWO. That's small cap growth. It's one of the best performing style ETFs out there across the market cap spectrum. Bullish rating here at Chaikin Analytics, by the way. So I think stock selection is going to be really, really important. Themes are obviously still going to make a lot of sense, but I think that themes are becoming more granular. Things like clean energy, take a look at ETFs like TAN or ICLN. Battery technology, obviously huge. The EV theme probably not going anywhere. Tesla, numbers were good that they reported over the weekend. NIO in China, numbers were good. Those stocks are working higher. Let's start to think down the line a little bit. Looking at ETFs like LIT and BATT, drilling down on their holdings, looking for other opportunities. Those are the things that I think are going to reward investors here in the near term as the new year begins. But those themes are all already in uptrends, right? So it's not taking the new year to go out and find something new and change our style. It's take the existing styles that we like and then find some good ideas within those existing themes. Fixed income, excuse me, that landscape is unchanged as the calendar flips as well. Take a look inside of Chaikin Analytics at the fixed income ETFs, and what you'll see is that the ETFs that have very bullish and bullish ratings are the riskier areas of fixed income. And the treasuries across the term structure, whether it's short, intermediate, or long-term treasuries, generally speaking, are bearish and very bearish. So what does that say about risk appetite in the market when something like TLT has a bearish rating, but HYG, the high yield ETF, has a bullish rating? What message is that saying? And then what's the trend? Well, the trend for HYG is up and the trend for TLT is down. It's pretty simple. I think commodities are going to continue to be a big theme. You're starting to see outperformance, right? Take a look at DBC, the Invesco DB commodity, broad commodity ETF. It's outperforming the S&P 500 by our work. So that's kind of interesting to me. Remember, equities don't always have to be the best asset class. 2001, 2002, coming out of the dot-com burst, commodities were the place to be. Massive outperformance relative to equities. I'm not saying that we're at the start of a new commodity super cycle, but it's certainly conceivable. Need to see more evidence. But if we look at fiscal and monetary stimulus, prospects for better economic growth globally, you could see the stage being set for larger commodity outperformance. And what's interesting to me is that it's not gold. It's not safe haven commodities like gold. It's things like rare earths. It's things like uranium. It's things like steel. Obviously, the ags are a theme that we've spent a ton of time talking about, and those continue to be strong as well. I think that they have an incremental driver there in the form of China. So that is a lot of what's on my plate as I get back to it in 2021. But what's interesting is there's not a lot there that's different. The trends are still in place. It's not like we flipped the calendar and I said, let's go find something new to talk about. We talk about the trends. We talk about how likely they are to persist. These are the trends that are in place. These are the trends that I think are going to continue to be in place. You can see in the background behind me, the box from Chewy. I think pets are a theme within the equity space. We love our pets. We love our Lola here. Pets and equities that cater to that theme, I think, are going to be interesting. It's something that I'm paying attention to closely. Obviously, Chewy is a way to play that. You can look at names like IDXX when they set up. I'm sure that there are a lot of others, but this humanization of pets is an interesting theme that's playing out. But again, not new. The trend is there already. So that's what I'm focused on. Trading day one of 2021. Glad to be back at it. Happy to coming back to you with these updates. Hope everybody is well and safe. Having a great Monday. We will be back to you soon. Have a good one.